Did Trump really make all of these changes for crypto? We're going to break this all down now. A lot of you have been asking me things like, what do you think about what's going on in Venezuela? How will this affect the crypto markets? And to be honest, it's a good question. For the reason that I put out a video last night around midnight in which I said it again, the market is about to wake up in a big way. I said that there might be a big change in the whole crypto market by the end of the first quarter of this year. That's not because of hype. It comes from a mix of macro conditions, market structure, and technical research. Now, when it comes to TA, there are big events that can make charts look very different, for better or worse. And what's happening in Venezuela is definitely one of those events. There's no getting around the fact that this is a huge deal, especially when it comes to risky investments like crypto. I want to be clear before we go any further. This is not a place for me to support war, strife, or politics. That's not what this channel is about. It's not my cup of tea to argue about resources or motivations. We're here to talk about money, charts, price movement, and how the market acts. That's it. This is another reason why being early is important. You don't get the most out of things when you act late. Getting ahead of the crowd is how they get them. The idea is easy to understand, help you change the way you think, get things done faster, and make more money over time. It's in the comment that was pinned. Let us go back to the market now. Let's start with the total value of the crypto market, which is about $315 trillion. We were getting close to $3.2 trillion at one point. It would be good to take a break here, especially if we keep building structure instead of going straight up. Bitcoin is staying above $92,000, which is a huge amount of money. Early today, there was a sharp rise, and that wasn't a coincidence. When the oil markets opened their futures, that move happened, and we saw exactly what we wanted to see. When big picture conditions start to change, Bitcoin did what a risky asset should do. Another great example is XRP. At its peak, XRP was worth about 2/16. If you remember, I made a video when XRP was worth about $1.88 that explained why it was ready to break out. We were already going up because the lows were getting higher. All we needed was proof in the form of a higher daily high. Now that higher high has been made, it has broken above the wick from December 20th. This is a great beginning. But we still need to follow through with our plans. For now, we can't be too optimistic because we haven't seen proof of a global higher high. There is still work to be done, and you need to be very patient. So let's talk about what's going on in Venezuela. This is where things start to get important. We got confirmation from Trump that after Nicolas Maduro is captured, the U.S. will use Venezuela's oil reserves and sell big amounts to other countries. He said, we're in the oil business. This wasn't just a guess. This is straight from a story by the Associated Press. No matter what your political views are, the fact that Venezuela has some of the world's biggest oil reserves is very bad for markets around the world. This is the video that everyone is talking about. He stressed very clearly that a lot more oil would be sold, saying that Venezuela couldn't produce properly before because of bad infrastructure. This one sentence sent shockwaves through markets around the world. Before this news, there was a lot of talk about how oil prices might drop below $50 per barrel as soon as the markets opened. The spot market hasn't fully responded yet, but futures have already given us a sneak peek. When energy prices change this quickly, it changes the conditions for getting money. And risk assets change when financial conditions do. There are more than 300 billion barrels of oil in Venezuela. It's more than any other country in the world. The U.S. now has control over the world's biggest oil reserve because it has access to that supply. This is very big. In the past, lower energy costs have helped stocks, crypto, and speculative investments do well. It makes money easier to get, lowers the pressure on inflation, and gets capital moving again into growth. That's why I've been saying this is good for asset risk. It doesn't mean we go up straight. It means that the big picture is changing in a way that will lead to higher prices in the long run. Now that we've talked about markets and money, it's time to talk about safety. Since many people forget about this during times of economic growth, there is no safety in crypto trading. It doesn't matter how big they are. Bybit, the fourth largest exchange by trade volume, lost $1.4 billion in one of the biggest hacks in the history of cryptocurrency earlier this year. There have been 10 big centralized exchanges hacked in total, and most of them were part of the top 10. Size doesn't always mean safety. The real question is, if you don't use cold storage, where do you keep your crypto? This is where sites like It Capital come in handy. They have high-end custody accounts that are based on fully closed loop methods that keep assets separate and safe. One of the best things about their site is that you can only withdraw money in USD to a linked US bank account. There are no connections to external wallets, which makes them much less vulnerable to phishing attacks and transfers that aren't allowed. When markets are like this, both chance and danger go up. It's not enough to just pick the right tools to win. They are the ones who know about psychology, placement, timing, and safety. This is exactly why I'm still sure that what we're seeing now is not the end of the move, but the start of something much bigger. We need to wait until the spot-based markets open fully to see how they look, but it's pretty clear what's going on so far. The price of oil is beginning to drop a lot. There are possibly some of you who are thinking, okay, this isn't really new. Oil prices have already been going down. To be clear, you are completely right. For a long time now, oil prices have been going down. In fact, the price of crude oil has been going down for more than 6 months. Bar chart data shows that crude oil has been going down for 6 months in a row. This is the longest loss streak in more than 10 years. That's important on its own. But here's what makes them different. Until recently, the chart hadn't really shown any signs of a bear market. We now have. We just made a lower low. That formally changes the structure from a technical point of view. The chart for oil right now shows that prices are going down. This is important because oil doesn't move by itself. It has an immediate impact on all risk assets, global liquidity, and predictions of inflation. It's not just oil either. Gas like natural gas is also being hurt. Natural gas prices dropped about 6% in the first 15 minutes after futures markets started. This was the first trading day since Maduro was captured. At the same time, the price of a barrel of oil dropped below $57 once again, getting close to its lowest level since 2021. Think about how strange this is now. Whenever there is a major change in geopolitics affecting oil-producing countries, energy prices go through the roof. That's how things usually are. The markets expect that to happen. So what's changed this time? It's easy to say, offer. It seems like the market is pricing in an increase in supply instead of a slowdown in supply. Not only is oil not being shut down, but huge supplies are now expected to be brought to market. Venezuela is going to give the world with a lot more oil and natural gas now that the U.S. is in charge. This is adding cash, not taking it away. The markets also look ahead. The market is aware that what happened over the weekend is not likely to cause a supply shock. We're not looking at lack, but excess. In the long run, the market is always right. This is exactly why we were keeping a close eye on it and thinking, hey, this could be very good for the market as a whole. Now I want to talk about a post I wrote on X because this breakdown really shows how I feel about the whole thing. Many people saw the post and shared it. Thanks to everyone who follows me on that site. It takes longer to read, but it connects everything. I told you to stop and read this right now if you have risk on assets. Right now, it's very important to think about what happened in Venezuela. A lot of people think that the price of a barrel of oil will go down a lot because the U.S. is taking over oil supplies. It was made very clear by Trump that the U.S. is ready to sell the oil and basically take over their stockpiles. There are important reasons why this is a big one. There are about 303 billion barrels of oil in Venezuela. That's about 17 to 20% of the world's oil stocks. Oil worth that much would be about $18 trillion, which is about half of the U.S. national debt. That number is pretty big. That is very big. And now for the important part. If the price of a barrel of oil drops by a lot, there are a number of reasons why asset risk could go through the roof. These reasons need to be broken down. In the past, when the price of a barrel of oil goes down, it's like the world economy gets a tax cut. Both businesses and customers feel better right away. It gets cheaper to buy gasoline. Heating costs go down. The cost of transportation goes down. It gets cheaper to ship things. All of this means that people have more money to spend. This is important because people are what make the economy go. Over 70% of the U.S. GDP comes from consumer spending. People spend more when they have extra money. When people spend more, the GDP grows faster. This isn't just theory. This is the way it works. In any case, it's not just about customers. Lower energy costs are also very good for businesses. All of the operating costs go down. Industries that use a lot of energy see their margins grow right away. When costs go down, profits go up, which often means that a business grows. That could lead to more jobs, higher pay, more capital investments, and better returns for shareholders. It works out well for everyone. To be clear, none of this happens all at once. This isn't like flipping a switch right away. It takes time for these effects to spread through the business. The markets don't wait for the facts to prove it, though. This is priced in ahead of time in the markets. So, the responses you're seeing now are real. At this point, both customers and companies are better off. Income that can be spent goes up. The ability to spend goes up. GDP growth gets better. Conditions for work get better. All of this makes it possible for the economy to grow. Now let's talk about the thing that changes asset risk the most, the monetary policy. One of the most important parts of inflation statistics is the price of energy. They have a huge effect on how people think about inflation. Another thing that most people don't notice is this. It's been months since we've had a real inflation report that fully shows how much energy costs. The last two reports on inflation didn't include energy in a way that made sense, and there would have probably been more inflation if they had. Part of the reason the Federal Reserve has been so slow to lower rates is this. We've been keeping a close eye on this. Even more interesting is the fact that U.S. inflation just had one of the biggest monthly drops since 2023, which came as a surprise. That sounds good, but there are some strange things going on underneath. The Fed's best measure is the Core Consumer Price Index. If you look at it, you'll see something important. Core CPI doesn't count energy, food at home, or food away from home. Gasoline is the only energy-related part that gets some attention. No full picture is shown of fuel, oil, power, utilities, heating, or anything else. It's not even close to being true when the prices of oil and other energy goods start going down. That's why this move is so important. When the price of oil goes down, people expect inflation to go down too. Both CPI and PCE inflation are expected to go down. Everything is affected by energy. Prices drop everywhere in the market when this one price goes down. This includes gas, heating oil, and transportation costs. This is a very positive sign. The Federal Reserve finally gets the cover they've been waiting for. With less inflation, the Fed can either keep rates the same without making it harder for people to get loans, or start cutting rates without worrying that inflation will start to rise again. There will probably still be cash injections elsewhere, even if the Fed doesn't decide to cut rates right away. The rates on money market funds will go down, and those funds hold trillions of dollars that aren't being used right now. When rates go down, capital starts looking for places to earn more. Where does it go? It goes into stocks, crypto, and other investments with risk. This is how businesses grow. This is the start of a cash cycle. When you look at the big picture and connect all the dots, it's not too much of a stretch to say that we may have just seen one of the best macroeconomic events in the last few years for stocks and bonds. Some people may disagree with the market about politics, ethics, or even the news. The market does not care. The market is only interested in money, supply, demand, and what people think will happen. Some of you don't like it when I say this, but it's true. Prices moving is what we're here for. Our goal is to find out whether big events like this are more likely to make prices rise or fall, and the effects are clear from what we can see. Does this situation in Venezuela hurt a lot of people? Of course. There's no doubt about it. The country was shaken up overnight, and real people are being hurt. This is why you're here, though, from the point of view of the market, capital flow, and price movement. This is what we look at. It's also clear that it's not just about oil when you look at the bigger picture. This story has more to it. Without a doubt, Venezuela does have a huge oil reserve. There are 303 billion barrels, which is already a huge number that is hard to understand. But let's go one step further and look at this from the point of view of how much it's worth. How much power is the U.S. really getting here? There are over $8 trillion worth of oil supplies in the U.S., even if they only sold them for half of what they're worth now. Take a moment to think about that. There were oil supplies worth more than the GDP of every country in the world except the U.S. and China that the U.S. took control of in less than 12 hours. It's 4 times bigger than Japan's GDP. The world has changed so much in such a short time that most people don't even know it. The oil market responded for the first time to this news. On Sunday at 6 p.m., futures first sold. We saw the response when it came out in the East Coast. Prices went down, and the next few days will be very important as markets try to figure out what this really means. Venezuela brings more than just oil to the table. Venezuela has about 200 trillion cubic feet of natural gas reserves, which makes it the 34th biggest country in the world when we look at the whole picture. With over 300 billion barrels of oil stored, they have the world's largest oil stocks. In addition to the world's largest gold reserves, over 8,000 tons, which are worth about $600 billion, they also hold more than 500 million tons of coal, about 2% of the world's renewable freshwater resources, and strategic minerals like nickel, copper, and phosphates that haven't been used yet. This is why the United States now sees Venezuela as a strategic advantage. This is a huge natural treasure. Again, this doesn't mean that all commodities will automatically crash. The market doesn't work that way. What we're mostly interested in here is how the risk on assets changes because of this change in how much liquidity and supply people expect around the world. These reasons should make it clear to you why this event really did change everything, not just for crypto, but also for stocks and the market as a whole. I believe that a big change is about to happen. In all honesty, I believe we are already seeing it. Let's go back to the charts now. This has been a very strong move if you have XRP and are keeping a close eye on the price. From the lows, we're beginning to move higher in a real way. XRP had already been putting together a base. I've already talked a lot about how momentum indicators like RSI were already flashing bullish messages. I'm being watched at key level 230. It will be a big deal if XRP can turn 230 into support. Why? We were trading in a range of lows around the middle of November. This breaks out that range and starts building a much better base above that zone. After that, around 265 will be the next big thing to look at. Some of you don't want to hear numbers like 230 or 260, but this is how trends really start. This is the beginning step. This setup looks a lot like what we saw in November 2024. We thought at the time, okay, if we break above 130, that's great. After that, there was a sell-off. After breaking above 160, there was another sell-off, and then the price went up a lot. The market doesn't move in a straight line. They walk up and down stairs. We can see a system like this now, higher push, a small pullback, and then more. We saw the same thing happen in April and May as well. Grow, hit resistance, pull back, grow again, and then range near the support that was there before. Finding and breaking through levels of interest is important before going after previous highs. This is not advice about money. Let us be honest now. It will be hard to get back to those previous highs right away. There is a lot of resistance up there. But if we start to break through these middle levels, it becomes much more likely that we can reach those highs. Something we should keep an eye on is the chance that the government will shut down at the end of the month. That is still giving me trouble. That needs to go away. Having said that, I don't think it will have a much bigger effect than past shutdowns, but we still can't ignore it. We should try to avoid it completely. Allow us to now talk about Bitcoin. I just wrote a post about X, and I also talked about this in the last film. The RSI has been diverging in a strong way, and the price is now beginning to respond. Still, I want to make it clear that I am still being careful here. Bitcoin is right on top of a big wall of resistance. Before we get too excited, I'd love to see us easily get $95,000. We should have a strong 3-day candle close above that mark. Until then, you should still be careful. The market value of all cryptocurrencies is also breaking to the upside, but it's pressing into a big resistance zone. It looks a lot like other times we tried to get into this area and then sold off, like around December 9th after hitting resistance at the end of November. I'm paying close attention to see if we can break above this blue range. If we do, it's a strong sign that the market as a whole is picking up speed. When it comes to Bitcoin, the most important area is between $96,800 and $99,100. Think of this place as a fair value gap turned around. We need to clear it for good. Then it's much more likely that we'll be able to reach our goal price of $100,000. The next big area is between $103,000 and $106,000. That area is very important because it's both a big support and resistance point. It would be huge to flip that zone. I am, in fact, keeping a close eye on everything, but things look good overall. And to be honest, everything is looking great for my Q1 prediction to start coming true. Based on what we know so far, the market has been acting exactly as we would expect it to. I really think this was a big event that changed everything for the better for risk-on investments. From now on, the most important thing to watch is how prices move during the week.